Welcome to the Daily Update. This is being prepared Thursday, March 31st, where we'll look at the action in the market today and then see how things look for Friday, April 1st. So happy April Fool's Day. We saw kind of a negative close on Thursday. Prices had been holding up fairly well and then dropped right at about the last 45 minutes or so. So now we're left with the question. First of all, why did that happen? And then next, was this just a short-term pullback to wear off some of the extreme overbought signals that we've been seeing? Or is this the start of what could be a reversal? And I'll be addressing that as we go through this. So let's go back over and look at Thursday. We did have a gap lower open. There was pretty slow price movement. We saw a little bit up, a little bit down, but then it increased in the selling and we dropped to below S1. Okay, but not a lot of technical damage done at that point. Then we saw more selling that broke below S1 and support. And then right in about the last 45 minutes or so, that's when we saw a big increase in selling. Now, why did that happen? It didn't look like there was any news. There wasn't really any technical events. What we have are calendar events. This is not only the last trading day of March, it's also the last trading day of the quarter. And so we probably had some money managers, some mutual funds, some hedge funds, just shoring up some different positions, and they had more selling to do than buying, and that took everything lower. That's kind of my take on things. With the downward move at the end, we did see a spike in volume, but it just got back up to average. So overall, we're just at average volume. But compared to what's been happening over the last few weeks, that was pretty high volume. But when we look at it in a longer term sense, we're just back to average. But our technicals are still fairly positive. In fact, they are positive. And I'll go through and give you my points for that. We still have some earnings that are coming out as far as inflation, interest rates, the different geopolitical concerns, Russia, Ukraine, what's going on with the Chinese lockdowns. People are also worried about the inverted yield curves, and I have some charts where I'll go through that. And then there's some news that came out about the oil supply, where it looks like, whether you agree or disagree with this, it looks like they're going to start tapping into the emergency reserves in the US with the hope that that might help lower some gas prices. There was also some news out of OPEC that they're going to try and increase their production or increase the amount that they put on the market. So that ended up helping oil prices to drop back, and at least in a very short-term sense, that seemed to be okay. But the stock market didn't really pay attention to that, at least at the end. So what can we say about Thursday? It was the last trading day of the month and for the quarter. The technicals are still positive, and especially our momentum-based indicators, they continue to improve. We did have some negative things where the Dow, the mid caps, and the Wilshire, and I might have left one off of here, they closed back below their 200-day simple moving average. Then we still have our geopolitical concerns. Russia, Ukraine, which can change like the wind. Inflation, interest rates that everybody's talking about. China with the lockdowns. The inverted yield curves, and I'll have some more charts where I'll go through that here in just a moment. Then the oil reserve news that came out on Thursday. Then, as far as the economic reports, the PCE price index, it was in line with what was expected, but it's still very high. It's just showing, yeah, people are having to pay more for the things that they need to live. And they're not necessarily making more at their jobs right now. Now, we'll get more of that on Friday with the big employment situation report that's coming out, because there's also the average hourly hours worked and how that's going. There's all the internal things inside that report that the market likes to fixate on. The S&P is still overvalued, taken by itself, and it will be overvalued for quite some time. But when you compare it to the bond market, since bonds have been really suffering, it's more fairly valued. Our trend is still positive, but with the down close, the ADX weakened a little bit. Our bias is negative. We've had 2 down days in a row now, but over the last number of days, our momentum is still positive. So let's go through the session. First, we look at sentiment, which is just about neutral right now. And here is the chart where we're right back up into the mid-range of this indicator. The VIX did spike up both with the bar down at the bottom and with the closing line. And the key point here is that we went back above 20 with the VIX. The VIX of the VIX also saw an increase on Thursday. Then the AAII weekly report came out, and it's showing that individual investors are a little bit more neutral now. They're not extremely negative. They're not extremely positive. They're kind of getting more up into the mid-range of things right now. Then those money managers who are actively managing, whether it's a mutual fund or a hedge fund, when this line is going down, that means they're taking less risk or getting into what's considered to be less risky investments and maybe more value investments. Well, with that bounce, we are seeing them really start to get more into riskier investments because it's a risk versus reward. Now, this is, even though it's up at 80, I would take this more as we're back to more of a neutral reading right now. When we get above 100, that's extreme optimism. When we dropped, certainly when we dropped down here below 40, that was extreme negative. But usually when we get back down below 60, this is when we want to keep an eye on things. Our sectors, every one of them was negative on Thursday. And here just shows how they've been performing. Energy still doing well, communication still taking up the rear. Then tech sector, after getting above the moving average, has fallen back. It was down almost 1.5% on Thursday. As far as inflation, and I've changed around the order of some of these charts. This is the CRB, which declined over 2%, but is still in an overall uptrend. Then when we take the CRB and divide it by the S&P, we can see many years where the CRB was underperforming the S&P. Well, lately it's been breaking out, and it declined a little bit on Thursday, but is still in a pretty strong uptrend. And then this is just an inverse of that same chart, where the S&P was really outperforming the CRB. Well, it's been starting to underperform currently. Then our technical alerts, most of them were negative. The S&P dropped below 4,600. The NASDAQ went below 14.4, then 14.3. The Dow dropped below 35,000. We had a couple of positive things. Canada is at an all-time high. The healthcare sector set a BPI positive reading. And then oil crossed below 105. Intraday didn't look all that crazy, and it looked like we were going to have kind of a quiet day. Well, we gapped a little bit lower, and we were right along this line that has been on the chart for quite some time. We went a little bit below, almost down to S1. Then we came all the way back up, and this was kind of the high for the day. We tried to get back up to the unchanged level, but we just couldn't do it. Came back down, danced along this previous, which is now acting as support. Well, we broke through that support, came all the way down to R1. And then here's the late day selling that we saw. Then here's what it looks like on a bar chart. Still, in my opinion, again, this is just an opinion, we're still seeing a pretty healthy move. We're seeing, even though we had a pretty strong down day, comparatively speaking, this is still looking okay overall. Now, if we continue to fall, it's going to look a lot more negative pretty fast. But we came back down through what looked like we broke through resistance here. Well, we came back down below it. So if we do make a run to go back up, now this is going to potentially be resistance again. And we close below this short-term resistance that it looked like we had cleared. So that's negative. And just incidentally, as I started to record, and this is many hours before the market opens, we're up about 0.5% with the S&P. Since the all-time high, we're now down 5.55%. Growth saw a decline, value saw an advance. Here's the two indexes together where growth is trying to come back and it's still above this moving average, but it did decline 1/3% on Thursday. And this is just the inverse, where we're seeing value see recent strength pretty much for all of 2022. Well, now it's been falling back. Then looking at the NASDAQ 100 against the S&P, it was flat on the day. Here's our peer value. We were down 1.5% with this index. And with our peer growth, we were down 1.66%. So this was a broad-based sell-off at the end. It didn't really help either the growth side or the value side right now. Then looking at our growth against value for our ratio, it just shows we were down 0.25%, where here we've been seeing growth really doing well. It fell back. For most of 2022, it's been declining and it's trying to bounce back up, but saw a bit of a decline on Thursday. As far as our trend, this is what I'm talking about. It looked like the ADX was starting to turn up. Well, with the decline on Thursday, the ADX is now turned down slightly. It isn't below 20 yet, but these two, the green line and the red line, are starting to get closer to each other. And if that happens, we're going to see the ADX continue to fall. The Arun also declined just a little bit, but not an awful lot of damage currently. We're seeing a decrease in selling, and we were pretty much flat with our oscillator. Decision point scoreboard here is the same. Short term, pretty much positive. Intermediate term, their trend models are positive, their PMO signals are negative. Long term, they continue to be positive. As far as breadth, with the decline, we saw a decline based on price and volume. And so far, we're not able to break through this moving average right here. We've been bouncing back down below that. We're still well above the 20-period moving average. And the new highs, new lows rolling over just a bit, but our other moving average was more flat. The accumulation distribution. And again, a few days ago, I said, maybe we're getting a little bit far away from this moving average. Well, this could help to improve that situation. Short term, still above the 20-day moving average here. And then this was giving us an extreme positive reading, and we've dropped down below that. Okay, that could be positive because we've been rising pretty fast here and we were getting pretty extreme. Well, now we've worn off some of that, but we also saw a decline in the 50 and the 200. Here's our spaghetti tree. We came down back below the 100-day moving average again. MACD. Still positive, but rolling over a bit. STO did show a decline based on price and volume. McClellan oscillator also giving us a really high reading. Well, now it's kind of worn off that a little bit. Stochc RSI, extreme, saw a decline, no longer extreme. Williams percent R, coming off of an extreme reading and just a little bit below the extreme category. Force index also saw a decline after giving us a really positive reading there for a while. Intermediate term, we are above the 50 still. Here's the 100 that we closed back below. PMO rolling over just a little bit, but still quite positive based on price and volume. PMO study, this was looking pretty toppy. We've worn that off now. This is still looking pretty toppy and rolling over with the buy signals, but we kind of flattened out to slightly increased with those PMO signals that are above zero. The BPI we didn't see a real spike down. It's still pretty extreme positive right now. And here's just a longer term view of that. We went back down into the top part of the rainbow on Thursday. Stochastics also were giving us a lot of really extreme positive readings. Well, short term, we've worn that off. We're still coming down intermediate term, rolling over a bit with the full stochastics. The summation index, even though it's not going straight up, it's still positive and advancing based on price and is more sideways based on volume. All of our oscillators, even though some of them might be rolling over a little bit, continue to be positive. The vortex decline based on buying, advance based on selling, but still positive overall. RSI also declined, but is still above 50. CCI coming off an extreme positive reading. CCI 20 coming off an extreme positive reading. Chaikin oscillator coming off an extreme positive reading. Chaikin money flow saw a bit of a decline, but is still positive. Ultimate oscillator coming off an extreme positive reading. See how the kind of the pattern going on here? Here's our itchy cloud. It's gone back into scratchy land, and we came right back down here to what could be support right now. As far as our trading systems, the elder system continues to be neutral for the S&P. It continues to be neutral for the SPY. The SAR continues to be positive. Different charts, Heiken Ashi, we do have a dark candle here, but still a pretty healthy looking chart overall. Now this could all change if we start to dive from here, but again, it's still looking pretty healthy as well. The KEGI declined a little bit, but is still positive. Renko didn't even pick up Thursday's move and is still positive. 3-line break also still looking positive. Equi-volume, yes, we have another red candle, but still this is not a really bad looking chart formation at this point. No signal with the point and figure. We're still coming off that double top breakout, but with the decline, it hasn't registered anything new. Long term, we are still above the 200-day moving average. We closed at 45.30, and the moving average now is at 44.84. So we got a little bit of room there. So that helps the long-term trend still stay positive. And here's the logarithmic scale. The big mega stocks, they were down almost 1.5%. They're still coming down after hitting the 200-day moving average. The special K still continues to advance, although it flattened out a little bit, but it's trying to get back in there. This is another thing. Our 50-period moving average study was giving us an extreme reading. Well, now it's dropped back down. We saw a bit of a decline on the 150 and the 200-day study as well. Broad market. Here's the S&P. We dropped in the mid caps and we dropped in the small caps as well. The Dow Composite was down 1.33%, but still above this moving average with an overall uptrend still happening here. The FANG stocks were down 2.89%, but still they had had a pretty good run lately. ARK was down almost 3.5%, but still seeing some pretty positive action from this bounce. Then the Dow, this is where we fell back below the 200-day moving average. The diamonds are still neutral. And here's small caps. We got slightly above the 200-day. We dropped below it on Wednesday. We went even further and we're getting back into this range overall. Then mid caps fell below the 200-day moving average. NASDAQ, which never even got to its 200-day moving average, it's coming back down as well. And then the NASDAQ 100, it was slightly above the 200-day moving average, then slightly below. Well, we broke below that in Thursday's session. The Vixen saw a bit of an increase overall because fear increased slightly. The Qs are still neutral. And the NYSE, this is pretty positive right now. We're right at the 200-day moving average. And this is a broad measure of the stock market. Can we maintain this 200-day moving average? S&P 100 underperformed the S&P 500. And the Wilshire, this is a little more negative because this is also a broad-based measurement. We dropped below the 200-day moving average here. We're still showing some improvement internationally. And then our all stocks, after coming up to the moving average, has been declining since that point. And then those that don't include US stocks are actually, they were up a little bit on Thursday. Broad market measurements. The dollar, after getting hammered pretty good on Wednesday, actually saw a 0.5% gain on Thursday. And here is the weekly chart. Oil was down almost 7%, right to about 100. And here's gold, which was up 0.75%, but still is not giving the breakout that a lot of people thought. And here's the gold ETF, and it was up 0.04%. And here's the longer term chart for that. Silver also declined actually a little bit. And here's the longer term ETF for silver. Bitcoin, and just as I started recording, it shows here into the 46s, we were actually in the 44s, but that can always change pretty quickly. So we're getting more into the mid 40s now with Bitcoin. Bonds, here's the yield curve. This is the 10 to the 2. We have not gone inverted on a closing basis yet. We have gone inverted from the 10 to the 5 year. And then we have not gone inverted when we compare the 30 to the 5 year, but we're getting close. Here's the one that's baffling a lot of folks. This is the 10 year to the 3 month, where this one is actually advancing. And then just because we're dropping around the 50% level with the 30-year yield, I wanted to include the fib chart here. And then this is it's kind of a new chart. What I'm trying to do is, here's the S&P up above, and I have another one later on that replaces this with gold. This just compares the different yield curves with the S&P. So you can try to look here and see, did this mean anything at that time? And kind of the conclusion that I get out of this is that, yeah, when we had an inversion, it eventually, most times, will lead to a recession. But right after we go inverted, we see a really powerful up move in the S&P. And we're kind of seeing that same thing with gold as well. But we have to get out of the inverted position first. That's the thing. And then here's our yields, which are really starting to get hit a little bit. They've really been declining, but that's not been giving any support to stocks, at least on Thursday. Internationally, also spiking up, but falling back right now. Then I actually drew a line right here, and we're starting to break support with the bond index that we look at. This is based on price, not interest rates. And the corporate bonds actually advanced a little bit with the current yield at 3.4%. Then here's junk bonds. Since the stock market was down, junk bonds ended up being down as well. Our different relative studies. Here's gold in the S&P, looking like a failed breakout, even though we saw 1.63 advance in this ratio on Thursday. Then this is energy against the S&P. Even with the decline in oil, we're still showing a pretty solid breakout. Growth against bonds just shows that growth underperformed bonds on Thursday. And here's tech against the S&P. We're coming right up to this moving average, and we've been bouncing back down. Kind of what we're seeing on the tech sector chart too. And then with the tech against the 10-year, it's actually, well, it declined a little bit, but was not a big change. It just shows that tech is really underperforming. The growth of tech stocks is underperforming the growth in interest rates right now. And this is just an inverse of this chart. And then comparing discretionary with staples, well, discretionary kind of had a rough day on Thursday. And then this is the chart that I brought up in yesterday's video. This is just showing the XLP sector. This is the staples, the things that you have to have. And times when it spikes often correlates with bottoms in the S&P 500. And that we did do that. We spiked right here. The problem with this chart is that we don't really know if it's a spike at the time. And so we need to keep an eye on this and just say, okay, this is on the table right now, and this can go into the background of how we make decisions. But you can see where we see a lot of double spikes. We see a lot that look like spikes, only to spike out even higher later on. So we have to be careful with this chart at the same time. And this is just a shorter term view of that same chart, where here is the bottom that we saw. We saw a real spike with the XLP, the discretionary, I'm sorry, with the staples, and it's been declining now, but we've seen a real advance in the S&P itself. And then looking at the S&P against the 10-year yield, it's underperforming and in an overall downtrend. Then looking at the low volatility stocks, they were down 0.5%, a little over 0.5%. And then to compare the low volatility with the S&P, it was actually up overall 1%. And you might hear a cat trying to get some attention here. This is the same chart that I had earlier, except now this is gold on top. And if you want to pause this and look at this, these are the different yield curves that we look at. And then comparing what happened after we saw an inversion, what did the price of gold do after that? And it's kind of looking similar to stocks, where we're seeing a breakout overall. But right now we're seeing some real contradiction. We have the 3-month yield curve is actually going up, where a lot of these other yield curves are going down. And then the one that Edward Yardeni uses, it's the 10-year to the Fed funds rate. It's actually advancing right now. So it depends on what camp you're in, but we're seeing some contradiction. So what's our outlook for Friday? Are we at the point where the short-term overbought readings have been worn off? That would be the scenario I would look at this point. But that's me. You might be more negative on things. The markets do remain in that intermediate term trading range. We're battling between growth and value. There are a lot of yield curve concerns, and that's why I tried to go through some of these charts. There's a lot of the talk about oil supplies, and is that really going to have an impact? Releasing the reserves, having OPEC step up with production and with supply, is that really going to help? Now, the big thing coming out on Friday is the employment situation report. We also have the ISM manufacturing index and construction spending, but it's the employment report that's the big one for Friday. And then all of the different geopolitical events that I've already been talking about ad nauseum. So what are our scenarios? I'm kind of going with A right now, that this is a short-term overbought resistance type of a scenario. And is Thursday's decline a reversal, or just to wear off the short-term overbought condition? I'm thinking that it's a short-term overbought condition. Now, I'll change that view if we see a lot of follow through to the downside on Friday, and especially if some of our charts start to look more negative. But right now, that's the scenario that I think is the most likely. We want to keep an eye on interest rates and on the yield curve. And then this disbelief versus belief. It's almost like people weren't believing it and we kept going higher. And then they got to the point where they were willing to believe it, and we went sideways to down and then really down on Thursday. You see how that works? That's why waiting too long and using a lot of different indicators can really be more beneficial. And then we're asking, can sentiment even turn more negative? We're right at neutral right now. What are we looking for the upside? We are still seeing strength after building that base. Our oscillators are positive. Yes, some of them are rolling over, and we do have moving averages. We broke back down through the 100-day that now may be acting as a resistance, but we're still looking healthy overall in my assessment of things. And then that belief versus disbelief debate going back and forth. And then if we do see more of a decline, we might see the ADX start to fall, and we might work into a trendless environment. But it doesn't look like that's a likely scenario. We need another day or two of that kind of action for this scenario to really be more plausible. So our conclusion, the S&P is still positive, and it still could be breaking out of a range. And we're still only 5% away from the all-time high. The short term, it's still positive, but we're hitting with some resistance. Intermediate term, we are positive, and the oscillators are positive, and the moving averages are either providing support or resistance. Long term, we're still above the 200-day simple moving average. So we're still pretty positive. Now, if this keeps going to the downside, that's going to change things. But right now, the positive far outweighs the negative from what I can see. Another thing is, I finish this up over the weekend, I'm going to try to put out a number of videos. Of course, after Friday's session, I'll do a daily video. I've been trying to post a weekly video. Those are more what I normally do. And then over the weekend, if I can, I want to do a series of monthly videos where I talk about the markets, where I did do a monthly video a month ago. I'll do that video. Then I want to try to work up and kind of dust off the economic videos that I usually do, just looks at the economic situation. I'll also, I intend to do one on the different sectors. I'll go through all 11 sectors in the S&P, and then I'll also look at some international indexes, just to kind of get a world view of things. Those are a lot of videos, and a lot of research goes into each one of these videos. So I'll do my best to try to complete those. But these are my intentions. So thank you. Have a really, really good Friday. Have a really great weekend. I'll prepare the daily video after Friday's market, and then all the rest of those videos as the weekend comes and goes.